And now, for our next topic, let me invite our panelists up on stage. First, Dr. Warren Ong, Head of Clinical Asia Pacific, Cigna Healthcare Singapore. That's Dr. Ong. Ms. Yvonne Ang, Cancer Survivor and Senior Financial Advisor. And finally, Mr. Ethan Neo, Senior Director, AIA Financial Advisors. Okay, we're all set. So the QR code is up there if you want to submit your questions. And let me just go through very quickly the topic so that we can allow some people to leave the room if they want to, and we'll have less movement. So for this panel, as you can see, navigating the costs of cancer care, what patients and families should know. Yvonne, let's start with you. Maybe you give us a little bit of background. What was the first thing that crossed your mind when cancer struck? When did you start worrying about money?
Good afternoon, everyone. I was diagnosed with breast cancer stage 2A when I was age 30 in 2019. So the moment when I was told I have cancer, the first worry is how long will the treatments be? What do I really need to go through? Chemo, surgeries, and most importantly, how much? Like, where can I go to get treated? And how much eventually all this will cost? And that was my biggest worry. Because okay. I don't know, I don't even have a ballpark.
Right, so what did you do when you wondered about that and you didn't even have a ballpark? I know that there was a lot of things that you had to juggle. The treatment plans, what's available out there, and plus this looming financial piece of it. So what was the first thing that you did?
I called my insurance agent. So just like most of you here, you might have bought something and after a while you just forget what you actually bought, right? So same like mine. So I actually wanted to be treated in the government restructured hospital. I need to go for a specialist appointment, but the appointment that was scheduled for me is 2-3 months later, and I couldn't wait. I cannot. I will kanjiong. I cannot wait for another 2-3 months. So I just called up my agent and was like, is there any way I can go somewhere else ASAP? So he's like, don't worry, I've checked. You actually can go to the private sector if you want to, and I can definitely get you an appointment like the day after. I'm like, sure. So then I asked him, this I think is a critical illness, so what can I claim, what can I not claim, and things like that. Because prior to getting my surgeries and things like this, I will have to go through a lot of tests, blood tests, mammogram, MRI, PET scans. So these are like thousands. So I feel really, really relieved when he told me that all this will be taken care of by my insurance. So yeah.
What was the very first financial gap that you felt?
Not able to work because I have to take a break to go for all these tests, right? Then, because I used to fly as a cabin crew, so I have to take a break to go for all these treatments. So this worries me a lot because no flying means no allowance. So I was like really worried, like, okay, the medical bill is being paid for, but how about my income?
What was the solution to that? How about your income?
Insurance.
Specifically what type? Could you enlighten us?
It's a critical illness plan, so it pays out a lump sum. So I was really lucky that my agent, donkey years ago, when I'm age 25, he told me that this is important. Back then, to be very honest, I cannot visualize how important this is, but I just follow, okay? So he asked me, if something happened to you, how much do you need? I also don't know how much I need. I just give him a random number, 150,000? So okay, sure. So thankfully, when I was diagnosed, I submitted all the documents. The insurer indeed paid out a check of 150,000, and they give me a huge relief because we are not well-to-do. My husband is not rich. So he don't have to worry that he have to take a break to take care of me. Yeah.
Yeah, and I think pertaining to the stress question earlier as well, I think during difficult times, you want to minimize that stress. Dr. Ong, I want to come to you. It's not exactly a related question, but it does relate to the sorts of things that is not top of mind awareness. For foreign patients coming into Singapore for cancer care, how are costs beyond the hospital bills, such as evacuation, flights, accommodation, caregiver expenses, typically handled?
So I think this really depends on the coverage in which the patients may have, right? So if a patient is a foreign patient, again, depending on the insurance that they cover, there are some additional modules in individual health plans that do cover repatriation, extrication from dangerous areas. And in those cases in which they are deemed to be necessary, these additional coverage may be given as well on a case-by-case basis. So in the case that repatriation is required or extrication is required, some of these caregiver-related costs, sometimes the travel expenses, may be covered by the insurer, again, depending on the insurance coverage as well as on a case-by-case basis.
You mentioned may be covered. What does that depend on?
It depends on, again, the medical necessity as deemed by the insurer through their internal medical team. So in the case that the person is, for example, severely injured in a remote area and that requires a repatriation out into a country with the right resources of treatment, that decision will then be made and the repatriation will be given accordingly. This happens a lot in international health plans. So again, it depends, and it's good to find out from your financial advisors if these are covered in your insurance policies, and if not, you also can get advice on how to then add on if required.
So for the benefit of those of you who are joining us outside of Singapore, who don't live here, Dr. Ong, you have mentioned there is an optional add-on module as well. Okay.
So within Cigna, we do sell individual health plans specifically, which covers the globally mobile and expatriates as well. So in our individual health plans, we do provide the additional module of repatriation and extrication if required. And that is something that if someone is concerned about, that can then be added on as an additional module.
Okay, so my next question is a big one, and Ethan, I want to direct that to you. Is MediShield Life or Integrated Shield Plan enough to cover treatments?
Okay, so that's a very wide question. So, as you know, right, the Integrated Shield Plan has undergone many changes, many reiterations over the last 10 years. So one of the most notable changes when it pertains to cancer treatment, right, is that in 2022, there's this thing called the CDL, Cancer Drug List, that was introduced, right? So what it means to say that, right, if your cancer treatment requires drugs that is outside of the cancer drug list, that means it's not stated within the cancer drug list, it will not be covered for your integrated shield plan, right? So as insurance companies, we are, a lot of us actually are, commercially driven, right? They usually do want to cover for things that, that you cannot really cover. So actually, some of us, we have cancer care booster. That means it does cover, you're allowed to buy a specific rider to cover for the cancer drugs that falls outside of the cancer drug list. So actually, what I want to say is that, right, for integrated shield plan, it used to be all-encompassing, right? But over the years, you can see that the benefits has been slightly changed over the years, right? There's some alterations to the benefits, right? So instead of being an all-encompassing plan, actually, we do have to look at other factors, other areas of insurance coverage that can help us to defray such medical expenses.
Okay, so there is one question on a rider on Slido, and this question is getting a rider necessary for cancer coverage? So let's tackle it right now. You talked about cancer booster, and because of the cancer drug list as well, right? So let's answer this question first. Is getting a cancer booster and rider is the same thing or not?
Okay, so actually, right, so we have MediShield Life, then we have the integrated shield plan. We use the MediSave to purchase, right? Then for more comprehensive coverage, people used to top up, people still do top up this thing called a rider, a cash rider, right? So the cash rider is supposed to give you additional benefits. Then they start to say that actually this rider cannot cover for certain cancer drugs, off-CDL drugs. So you get to buy a rider on the rider, right? So there's many riders that you can buy. Rider, the generic term, is just something that tag onto the main plan, right? So for layman's term, it's like the add-on, right? You buy McDonald's, right, it's the side dish and stuff like that. So the rider, right, you can just add on. So is it necessary to get a cancer coverage? There's always a debate between whether this is important or not. Why? Because the rider is not free, right? So there's a cost that comes along with these riders. Obviously, in the perfect scenario, if the rider is free, right, everyone say yes, I want to have the rider because rider does cover more things. It's more encompassing, right? But of course, there's a cost-benefit analysis. So it depends on your age group, also your own view on the propensity that you potentially may get cancer or any other treatment, right? There's maybe some adverse selection ongoing, but it's up to you to determine the risk and the benefits and the cost for yourselves. It really depends on individual.
Okay, and many of you may have noticed in the news media there has been a lot of coverage about the changes to the riders under the new April 1st, 2026 rules. If you don't know, just go to Instagram to Mr. Ong Yi Kang's account. He keeps posting about this. So specific to the changes to the new rider rules, Yvonne, you are a financial advisor. Tell us a little bit about how that is affecting us.
So the new rider means that your co-payment, it used to be 5% capped at 3,000 per policy year, and your deductible is actually covered. But the new rider means your co-payment will be doubled right now. From 5% co-payment capped at 3K, it will be now 6,000. And now deductible are payable. So it depends on the ward that you admitted. Then you will see the table, like how much it costs for that ward.
Okay, Ethan, explain to me, what does it mean? If I want to buy a rider today, we are already on 18th April. If I want to buy a rider today, what is the impact on my coverage and on the premiums that I have to pay, as well as out-of-pocket expenses?
Okay, so generally, right, the purpose of having this deductible and the extra co-payment, right, is such that the amount that is paid out from the rider is a bit lesser. Right, so in fact, right, the premium should be a little bit cheaper as well. Right, so if you were to purchase a rider currently under the new scheme and new rules, right, it's generally there's an overall general 30% discount from the previous riders, generally, right. So, but the main difference in coverage is that the first 3,005 will not be claimable. Actually, the bulk of the claims administered using riders, right, are small claims. Small claims meaning, right, is claims like 3, 5K. 5 to 10K, very, very small claims. So the first 3,005, right, generally they will not be covered anymore. And subsequently, right, you have to do a 5% co-payment. In the past, right, the co-payment is actually capped at 3,000. So now the cap is at 6,000. So the overall loss limit, if you should have a rider, is 9.5K. Instead of previously, right, it's just 3K. Right, so that's a main difference when it comes to the amount that you can claim under the rider.
Okay. Yeah. Wow, right here, right there, I'm also a bit lost already. I find it a bit difficult to follow. But the bottom line is, I think if you bought your rider before November 2025, was it? November? Yeah, November 2025, you are not going to be covered under the new rules, right? But when your rider is renewed, what sorts of things should we know? Or when you want to buy a new rider? Yeah, sure.
So if let's say you purchase before 2025, right? Before November 2025, you have the option to change to a new rider or maintain with your existing rider. But however, if you purchase between November 2025 last year to 1st April this year, whatever benefits that you have, if you are to sign under the contract of the old terms, right, you will definitely still have to transit to the new rider comes 2028. But of course, you buy a new rider now, obviously it has to be under the new rules, which the loss limit has increased from 3,000 to 9.5K.
Yeah, from what I understand, if you buy a new rider like right now, you would end up paying a lower premium, as high as 30%. But it also could mean that your out-of-pocket expenses will be higher in the event that you do claim. Okay, so just be aware of the changes. I have a more general question, and Dr. Ong, please feel free to jump in. Is there such a thing as full cancer coverage?
I think it's a very subjective term to determine what full cancer coverage is. I think in the local plans as well as in the international plans, I think what we really try to do is to try to then go through the journey with the customer and not to look at ourselves as just claims payers, but really to be with the customer through the care journey. So in Cigna, we cover not just Singaporeans, but we cover international people, expatriates as well. And in our coverage, we do cover cancer specifically, regardless of the modality, whether it's radiotherapy, whether it's gene therapy, whether it's chemotherapy or surgery. Again, the basis is really that it is medically necessary. And when we define medical necessity, it's based on international guidelines, as well as the organization or the international insurers' guidelines accordingly. The moment that all of these are fulfilled, then the liability would then be quite clear as to the insurer having to pay out accordingly. So I think that's the way we functioned. In the way we function, we don't have that clear sublimits. There are certain conditions with with sublimits, but specific to cancer itself, we don't have a very clear sublimit on cancer coverage. There are other things with regards to the cancer treatment that includes miscellaneous items. For example, in some patients who has had a mastectomy, which means a removal of the breast, which may require a certain equipment, for example, a mastectomy bra, or wig, because they are wigs that they may have to wear because of chemotherapy. That would be then covered as well by Cigna's international health plans up to a certain limit. So there would be sublimits in certain aspects. So I think it really depends on which area of cancer-related costs you are mentioning about.
I'll come to you in a bit regarding the sublimits, but for now, I want to stay on this question. And Yvonne, maybe you can try to answer this question. Is there such a thing as full cancer treatment coverage?
No. No, unfortunately, I'm so sorry, no. So as you know, for local plans, there is the co-payment that we just mentioned, right? Regardless it's 3K or 6K. To have a rider for me back then, I mean, even now, right? Actually, this is my 7-year survivor. I'm still claiming because I'm still on medications. Every 11 weeks, I'll still visit my oncologist for blood tests, scans, injections, and to take my prescription for my daily meds. So this cost, because I'm in the private sector, definitely is a bit more costly. That will cost me about 3,000 every 11 weeks. So with the co-payment, back then when I was still 100% claimable, when they changed to 95, I was a bit worried. But I realized that for a long-term treatment like this, for at least 10 years for me, out of 3,000, I only have to pay like $80 to $150. I think that's a huge deal, you see. So unfortunately, no, there's no 100% coverage, but how I make it 100% for myself is through the 150,000 payout that I have. So that sum of money that I receive, I can use to pay this, and I can use to buy a wig, because we don't cover wig. Okay, as long as it's not medically necessary, you cannot use it to claim. So I really legit bought 3 wigs, long, short, blonde, black, everything I tried. And I want it real hair, okay? So it's very costly. And with that sum of money, because back then, I was still supporting my mom, like allowance. Without income, money take from where, right? So that payout actually allows me to do so, to continue support my mom, yeah.
Okay, look at her now. Isn't she gorgeous? You've come a long way, babe. Yes. Good job. Okay, now I was going to ask you, how did you manage your drugs costs then, and how do you manage the follow-up scans now? You've answered a little bit of that, but perhaps you can tell us about the 4 times income rule.
The 4 times?
Yeah, the income rule.
Sorry? Oh, okay. Because different patients have different prognosis, right? So ideally, we always aim to have 4 times the coverage of your annual income. For me, I'm lucky, it's very straightforward. Stage 2A, just remove the lump and I'm fine. There's no spreading. So my treatments are very straightforward. And I got everything done quickly in 6 months. So technically, I don't have to take such a long break for me, right? But we do see a lot of people that struggle with treatments and healing. They go back and forth with their treatments. So sometimes they can take a bit longer, 3 years or even 5 years. Yeah, not able to work properly. So the guideline ideally is about, if you were to buy a critical illness plan, we are looking at least 4 times of your annual income if your budget allows.
Yeah. Can I just ask either Ethan or Dr. Ong, feel free to jump in. Yvonne has talked about the 4 times annual income, but I have also heard other numbers, like 6 times or 10 times. So is there a correct number, so to speak, and is it specific to critical illness only?
Okay, thanks. So actually, the 4 times, okay, this guideline is set forth by LIA, Life Insurance Association of Singapore. So I did a needs analysis, a needs study. Recently, the recent number is 4 times. Previously, when I came to the industry, right, there are people telling me 5 times, 6 times, as you mentioned, right, can be quite confusing, right? So generally, right, as a rule of thumb, it's 4 times. But of course, individual circumstances do matter. So if someone earning $2 million a year, right, asking to buy $8 million of insurance coverage, almost cannot secure this kind of coverage, right? So it's just a rule of thumb. It's supposed to meant to cover for maybe a couple of years of expenses. Okay, if you go to a bit more technical, right, it's supposed to be the sum of the discounted cash flows of the expenses they're supposed to have. Means that, right, you expect the next 5 years, maybe you think that 5 years you might be out of job, all your expenses add together, then you discount to present value, right, how much you require. So that's the technical and scientific answer for that. But to keep things simple, to make sure that the masses do remember this, as a rule of thumb, they just say that 4 times annual income. So the latest number that we usually use in our planning, right, will be 4x, 4 times of annual income.
So I'll tell you in the newsroom, when my boss come to me and say, so is it 4 times or 10 times? She will want an answer. So I will tell her, minimum 4 times. Correct, I'm not wrong. Minimum 4 times. You can go to 20 times if you can. Power to you, right? Dr. Ong, do you have something to add to this, or shall I move on?
I think you're right. I think it's a rule of thumb, minimum 4 times. But it also depends on the needs of the individual and the family as well.
Okay, so let's get back to you, Dr. Ong, regarding the sub-limits. In Singapore, we talk about the drug list, which I will go on a little bit about. So can you talk about the sub-limits for individual treatments, for example, genetic therapy, proton therapy?
I would describe it in 2 parts. I think, and I wouldn't go too much in detail of the local integrated shield plans, but in the gist of it, my understanding for the integrated shield plans is a lot of times there are certain limits in certain treatments, whether it's in gene therapy, whether it's in proton beam therapy, up to certain sublimit. And when I say sublimit, it means that the amount in which you can claim is a certain amount. Anything in excess of it would then be covered by the individual thereafter. In the work that we do in Cigna Healthcare, as mentioned earlier, we do cover individual health plans for expatriates and globally mobile individuals. We do not look at it on a modality of treatment. We look at it on the condition of cancer coverage in general. And depending, again, on the type policy that you hold, we do cover fairly significant amount, whether it's on proton therapy, gene therapy, as long as it's deemed, again, to be medically necessary. And when I say that, it really does mean that it's treatment that's proven, non-experimental, and is globally recognized as treatment for that specific cancer in question.
Just very quickly, for expats or patients with global plans, do the same rules, such as your treatment sublimits, apply when they go to a private hospital in Singapore?
I have to say that we do not have that cancer drug list consideration directly. But again, as mentioned earlier, we do have to ensure that the treatment given is non-experimental, right, and non-investigative in nature. So it's not as a blanket rule that we cover anything that's given, but when that is passed, then the coverage according to the annual sublimit will then be imposed accordingly.
Okay. Ethan, let's get back to you now regarding the CDL versus off-CDL. The CDL stands for cancer drug limit. CDL versus off-CDL. How will this choice affect a patient's bill?
Okay, so maybe just give a context on CDL versus off-CDL. So basically the reason why there's this CDL implemented, right, is because the government also realized, right, there's a lot of claims arising from the use of cancer drugs. So for drugs that is not non-cancer treatment in nature, right, they actually inflate at a rate of 6% per annum. But for cancer drugs, right, actually they realized that if they cover all cancer drugs, the rate of increase per annum, right, is 20%. So they went on this mission, right, to actually come up with this CDL to ensure the cost effectiveness of the CDL. So that means it's value for money. Right? When you say value for money, right, doesn't mean that the drugs are better. That's why it's in the CDL. Right? So of course, there's a reason why certain drugs are excluded from the CDL, of CDL drugs, right? Because generally they are more expensive. But you, as a consumer, you should also know that, if it's more expensive, right, it might be better. There's a reason why it's more expensive and people are still using it. So let me give you an example, hypothetical. A drug may be for the same treatment, say stomach cancer, right? If let's say drug A is in CDL, is inside the CDL, but the efficacy, right, is 70%, but it's covered by insurance. A drug B may be off CDL, efficacy may be up to 95%, not covered by insurance, right? So obviously, as a patient, right, I have to choose between my financial well-being and my personal well-being, right? So I'll be caught in a dilemma, right? So that will affect the drug, using CDL drugs versus non-CDL drugs. Obviously, if you use a non-CDL drug, that means off CDL, the bill is definitely will be much greater.
So you will pay the full cost of
Yes.
the drugs consumed?
Yes, unless you have a specific rider or you have other plans like what Yvonne has. She has other plans to supplement and to complement to defray this kind of cost.
So, as a survivor, Yvonne, I was going to ask you, he said drug A is 70% efficacy, drug B is 90%. How would you choose?
Without the rider, I will go with drug A. To be very honest, of course, I would like to stay alive as long as possible. But the cost is too high to bear because we don't have money, that kind of money. Because a lot of times the drugs, you don't just take it one time.
Yeah.
You take it a couple of times. And there are drugs whereby single dose can cost you like 5 digits or high 5 digits. So if I were to go with like 3 to 6 sessions, that is like how many hundreds of thousands? I don't have that kind of money. Who am I going to borrow the money from? Sell my house, sell my car, right? So, I mean, logically, of course, I want myself to feel better, but since I don't mind choose drug A, to be honest.
Yep.
Yeah.
Yep. So yes, Dr. Ong.
Could I just add on? I think really just to be objective and to understand the intent of the cancer drug list, they do review it on a very regular basis to ensure that the citizens of Singaporeans are covered with what is really necessary. When we really look at cost effectiveness, yes, I do agree that an effectiveness may be 95% in one and maybe 70% in the one that's covered. But when we look at it, we kind of look at it on a ratio between the amount that is increased in terms of cost with the amount of value or efficacy or efficiency or efficacy in which it gives to that individual. And based on that, that data changes, right? That data changes because the pricing of the drug changes as well. So I have to give credit to the government as well that they do very regularly look at what is required by our citizens to ensure that the most updated cost effectiveness analysis is done and whatever needs to be placed in a cancer drug list is then placed accordingly.
So can I just ask very quickly, before I choose my drugs, for example, I will need to verify with who to ensure that the drugs is in fact on the list, you know what I mean? Because all this list, the contract, so many words. I'm going to miss something. So who do I ask? The doctor, the nurses, or my financial advisor?
Maybe I
yeah,
can take that
Dr.
first and then maybe you guys take that after. I mean, I don't want to push it to the medical professionals to handle this, to be honest, but they would, to a certain extent, understand what is on the cancer drug list, especially in the case, and I apologize that oncologists are here, but oncologists would likely understand within their realm of the cancers that they manage which drugs are potentially in the drug list or not. So I think that's the first line of really understanding the coverage. Thereafter, potentially the financial advisors would also have an idea of the extent of coverage, and they probably understand the financial aspects when they look at the cancer drug list as well, because there is a certain limit under the Medisave limit, and again, based on the product that they purchase, there is a certain number of times in which they can cover if you have a rider. So I think this is better advised by the financial advisors.
Okay, healthcare provider as well as your financial advisor, okay? In my business, we never go for single source. You never ask just one person. Fair enough? Because then you have to cross-check, okay? I'm running out of time, but I think this is an important question. Can I switch to a cheaper plan or a different insurer while I am undergoing treatment? Ethan, what's your recommendation?
Generally, right, we do not recommend any switching of plans. So there's a professional code of conduct, right, such that we do not entice customers to switch their policies. Okay, why is that so? Because usually when you purchase a plan, maybe say 10 years ago, right, it's supposed to cover you and assess you based on your health back then. Usually nobody gets healthier and healthier, right? Usually people's health do deteriorate over time. Seldom, all right? So usually at that point of time, 10 years ago, your health is in a better state than it is now. It does cover you for all conditions that is being diagnosed subsequently. The insurers are liable to pay for your treatment, right? So if you choose that, actually you see that maybe certain companies, they have a cheaper plan, you choose to, because of cost effectiveness, you switch over, they will assess your health at the point of application, which is like currently, right? So with that, right, actually, generally it's not a good idea to switch your plans because you face a loss of benefits and coverage, right?
Yep, got it. Okay, I'm going to go to take questions from the floor. Yes, I have a lady over here. Can we get the microphone to her, please? Okay, so staying on the course, check on your policy coverage today, okay? Madam, your name, please.
Hello, I'm Ms. Wong, or Madam Wong. This is an important question regarding critical illness coverage. When does it kick in? Because I have one ex-colleague. She was diagnosed with, if I'm not wrong, ovarian cancer, but in the early stage. So as soon as she got the diagnosis, she approached her insurer to claim, but was rejected because, according to the wordings, I also read mine, that it will only cover invasive, meaning already spread and likely hopeless. Can you please enlighten me on this?
Thank you, Ms. Wong. Ethan?
Thank you. Thanks for your question. So actually, in the past, right, there's a lot of different kinds of critical illness definitions across the different insurers. So that's why LIA, they do come up with a standardized critical illness definition list so that there's no insurer, right, that can hide behind and say, hey, terms and conditions, fine print, I don't cover for this, I don't cover for that. Right? So they do standardize the clauses over the years. But of course, this is a recent change, maybe say in the last 1 or 2 decades, right? So these critical illness definitions, right, generally they do cover for the more major cancers, major illnesses, right? So because of that, I think the coverage or the terms of the contract, right, is quite specific. All insurers cannot change. They can give you additional benefits. They cannot take away certain benefits that's under the critical illness definition, right? So that's why there's a lot of insurers nowadays. They do cover for intermediate stage and early stage, so that because customers were laymen, I myself, I'm not a medical professional, I'm a layman as well, right? I purchase insurance is such that something bad happens, I get paid, right? But the older plans, right, they do not have that kind of governance last time, right? So that's unfortunate. But now with the newer plans, right, generally they have a standardized definition, and also there are certain insurers, to be more competitive, right, they do offer coverage for intermediate stage, early stage, so that it's more comprehensive, right? So just to answer your question, yeah. Yeah, so when you purchase, okay, so the question is the definition locked in at the point where we purchase it? Answer is yes, because that's when you sign the contract. They do not usually ratify the contract with other additional terms. Yeah.
Okay, do we have another question from the floor? Yes, I have a lady over here. I'll go to Slido in a bit, okay? The question's on Slido. Yes, please.
Asking about the changes in the rider. So in the past, it used to be, 10% co-payment and then 3.5K deductible. So now, just now, Diana mentioned 9.5K. I just want to ask, does it mean that out of pocket with the new changes, I have to fork out 9.5 thousand before my insurance pay the first dollar of my hospital bill? Or,
Did you get that?
Yeah.
Okay.
So basically, right, the first 3,500 is called the deductible. That's the minimum spending. So those who drive, right, have a car, right, it's called excess. That means the insurer don't pay a single dollar until the first X amount is being paid. So to answer your question, right, it's the first 3.5K, right? So subsequent amount, right, 95% will be covered by the shield plan and the rider. Your own co-payment is just 5%. Just that this 5%, right, if the bill is very, very big, right, it adds up, right, they will stop your limit. They'll cap your limit of loss, right, at 6,000. So the first 3.5K plus the subsequent co-payment, if it aggregates to a large amount, right, you maximum have to pay 6K. That's for the rider. Yeah.
Thank you. So let's take a question from Slido. Oh, what was that long question? For an individual who already got diagnosed with cancer, and that's without insurance, and it's now cancer-free, and then availed insurance, will this person still be potentially covered in the future for new cancer diagnosis and relapse?
I mean, maybe I can answer this based on my own experience. So this varies from what cancer the person have, okay? We do have clients who had thyroid cancer, and he's well for 5 years, and we submitted memos from the doctors to prove that he's been very well, no medications and no more treatments needed for a whole 5 years, and insurer still gave him the full standard coverage. But however, there are cancers like mine, breast cancer. It's a bit more trickier because mine is related to hormones. So, and I need a longer time for treatments with my medications. So even though it's my 7th year right now, I'm not insurable. To the insurer, I'm high risk, okay? So I've tried, actually. So what the insurer normally will say that based on your health condition right now, yes, that you think you are good, but because you are being controlled by the drugs, maybe you come back again 5 years later with a better doctor memo to prove that you are clear, that you are good without medications and things like that. Then they have more confidence to insure you again. So unfortunately, it depends on how long have you been recovered in remissions, and then there's no clear answers that you can or cannot, depends on the illness and the type of cancer. So go ahead and talk to your financial advisor, produce your doctor's memo on your current situation, and try to apply for something. then we will know.
So related to this, can I ask the panel as well, is it important when you have checkups to make sure that you keep your documentation? Related to insurance, I have spent the last few months calling all my doctors saying, can you please give me a memo to say this? Can you please give me a memo to say that? How important is that?
I think it's important to keep your own information because information is really yours to have, right? I think that's also the reason why fairly recently, the government did come out with a health information bill and act really to protect the individual against, misuse of information. That technically is something that you deserve to own yourself. So I do believe it's important that we keep track of all these.
Okay. Did you have something to add, Ethan? Go for it.
Yes, so generally, it's always advisable to keep medical records. So sometimes people just say that I need the latest medical report to prove my current health when I apply for insurance, right? But it's always good to keep a track record because from instead of having a singular point of data, right, if there are multiple point of reference, that means the things, you can see that actually, right, the health condition is getting better and better as time passes. There's a proven track record. For example, if you have a lump or a cyst, right, it shrinks, it gets smaller and smaller and smaller, or it shows signs that it doesn't increase in size. That will also prove that actually your health is not it's not deteriorating, right? So with that, right, the underwriters will have more confidence to offer you a more favorable term.
Yeah, I have learned my lesson recently where my husband says, do you have this? Do you have that? I said, huh? Like gong gong like that, right? When you don't have documentation, it's very hard to prove when you want to do a claim or when you want to port your insurance as well. I've got a couple more questions. Does anyone here want to ask a question? Why are the people behind so quiet? Anyone behind? Oh, yes, I have a gentleman right at front. My runners are very athletic ones, so don't you worry. Yes, sir.
Actually, I just want to add a little to what Warren shared, as well as share a little around how LIA speaks to critical illness definitions. I think there's a list, if I'm not wrong, of about 40 odd. And it's all driven by reinsurance. So besides the main insurer like AIA and all of that, there are reinsurers like Munich Re and Swiss Re and all that. And they underwrite the product. So that goes towards the products that AIA FA, for example, sells. And all of these, they have specific definitions down to something that the doctor would swear by, the medical oncologist. Yeah. So in that sense, to the documentation is useless unless there's a full evaluation that actually states your health condition specifically in terms of blood tests and all those other things that you are clear from imaging, from blood tests and all of that. Yeah, thanks.
Yes, I hear you. Yeah, I did need that. So that was a comment rather than a question. If we have a bit of more time, I want to talk about corporate insurance, right? We didn't manage to talk about it just now. What role does it play in managing cancer treatment costs, corporate insurance?
Okay, so corporate insurance is one of the most overlooked piece of our financial planning because there's a certain type of products, right, that actually does apply to corporate insurance. That means for a company level, they can implement for their employees. The employees otherwise wouldn't have been able to get at their personal level. So corporate insurance is often overlooked piece of the puzzle when it comes to financial planning and insurance planning. So typically, a company, in order to, so for some of you, if you have a GP outpatient specialist kind of coverage, right, definitely they would need to have this thing called GHS, right, or GT, or which is group hospitalization and surgical, right? So what happened is that last time nobody pays attention to this because our shield plan, right, integrated shield plan, does cover for 100% back in the olden days, right? Then they cover for 95%. There's not much incentive for people to find out what they have in their corporate insurance. But nowadays, with the shield plan changes, with the rider changes, the benefits have been reduced. So that means the out-of-pocket expense have been more. So it's always a worthwhile endeavor, right, for you to go and take a look at what you have in corporate insurance. You might find a piece of jam lying here and there, that can really help you to cover your bills. Yeah.
Okay, but are there limitations, Dr. Ong?
Yeah, I think it's important to understand the benefits of your corporate insurance against your individual insurance. But I would also caution that regardless, individual health insurance is very important. Firstly, we can't guarantee employment, right? So if we can't guarantee employment, that component may just disappear one day. I think that's one. Number two, again, depending on the size of the company, again, the employee benefits in which the HR may provide to the employees, that coverage would then differ as well. So having said that, there are still components within the corporate health insurance that covers cancer as well. So you can imagine it as a supplement or additional component to tap onto instead of just an out-of-pocket for the rest of it if you only have an individual health insurance plan.
Can I sum it up this way? Corporate insurance is a good to have, but don't
and it's
rely
important to know
on
what you have. But you cannot just rely on it because we can't guarantee employment all the time.
Yep, got it. So let's take one question from Slido, which I think, Dr. Ong, you will be able to help us with. What about getting second opinion overseas or seek an experimental trial in US or Europe? Will international insurer cover this?
Thanks for the question. I think in Cigna, specifically for us, we do have a clinical case management team, and these case management team members are registered nurses, pharmacists, doctors as well, that runs across the globe. And what we do for our customers is that we actually provide the navigation of the care journey with them. And if they require a second opinion as well, we do actually facilitate these conversations. So there's two parts to this question. The first was that on second opinions. I think the next point is on experimental. As earlier mentioned, within the way we function as international insurers, we're very clear that experimental treatments are not covered on a direct basis. So if the patient does go through experimental treatment that is not shown to be proven or still investigative in nature, that may not be covered at an immediate upfront basis.
Thank you for that. Do I have any more questions from the floor? Otherwise, anyone? Okay, I'm just going to ask this as a wrap question for my panelists. What is the one key thing you would like the audience to remember about cancer insurance coverage and financial preparedness? One thing.
So like I mentioned earlier, right? So financial preparedness is to ensure that you will never have to choose between your financial well-being and your personal well-being when it comes to cancer treatment and any other treatment. Yeah, so that's the one thing I would like you all to remember. Yep.
Okay, I never say, he say already, you cannot repeat. Must be a new point. Yvonne or Dr. Ong? Yvonne, okay.
To buy your insurance and your coverage as soon as possible. Especially, there's no later or wait for my bonus, it's now. If you don't have much budget now, you just buy a little bit, buy the basic. Because I understood that you and I is the same. 讲很好听啊, die lah. No, die not so easy one. Not easy to die. Okay, yeah. Okay, so me and you, our worry is the same. If I were to forsake, I don't want to burden my family. Am I right? Right. So I didn't because I bought my insurance young. Yeah. So my mom, my family, they don't have to worry. Yeah.
Dr. Ong?
I think health insurance coverage preparedness is really a shared responsibility. It's both the insurer as well to provide a peace of mind for our customers as well as our patients through their care journey based on the plans that they've purchased accordingly. But it's also very important on an individual level to then understand that, again, catastrophes and illnesses are really unpredictable, and to ensure that you have sufficient coverage as early as possible.
Might I just add also, Yvonne had also talked about sufficient coverage that you can afford. I think the affordability, not just for today, but into the future, it is insurance that you can afford. And to the point that Ethan talked about the preparedness, I really want to recap, if you like, what we have been talking about. One, the booster necessity. Think about the booster necessity because your integrated shield plan alone may not be enough for newer experimental or off-CDL drugs, for example, or specific types of treatment. Secondly, the 4 times or 6 times or the 100 times rule, a realization that your critical illness coverage should ideally be 4 times your income, your annual income, for example. And what is that for? It's really for you to act as a true financial bridge, let's say, hopefully during the recovery period. And then the 2026 policy awareness, that one really cannot run away. It's everywhere in the news. And that is new riders will require more out-of-pocket deductible and higher co-payment gap. As for what your options are, your financial advisor should be able to guide you. Okay? With that, can you join me to thank our 3 panelists for their sharing? Thank you. I'd like to invite you to take a rest.